morning, everyone, and welcome to our webinar on inheritance. This is such an important topic for all of you and your clients. I'm really looking forward to discussing it, and I hope you're going to get a lot of value out of spending an hour with us this morning. I'm Jennifer Anderson from Innate, and it's a pleasure to have all of you with us today. Today, I'll be sharing the hot seat with Lauren Walker from Currency Partners. Lauren has over 15 years of experience in foreign exchange and with helping clients. And I can just say in the couple of sessions we've had together, I've learned so much from Lauren, and I'm sure you will as well. Welcome, Lauren, and thanks so much for joining us.
Thanks, Jen, and hello, everyone. Good morning. I'm excited to be here.
Before we get into it, a quick note on CPD. Details on CPD points will be confirmed after the session. And then in terms of questions, as always, we're very happy to take questions at the end of the session. There's a Q&A section at the bottom of your screen. Please pop your questions in there as and when they come to you, and we'll make sure that we answer as many of them as we have time for at the end of the session. Right, let's get straight into it. Lauren, why do you think this is such an important topic for advisors?
Well, I think South African advisors in particular, two elements. Investing offshore is incredibly popular now, and we see that demand increasing every year. And South Africans are now global citizens, and not just South African citizens, really. And there's no real training, I suppose, in terms of what you study when you become a financial advisor around these elements. And so I think it can be quite challenging. So hopefully today we can add some value on these points. Yeah,
I mean, that's so true. It's not a typical module you see, you know, in kind of your CFP training, and certainly not when you write your phase exam. So, but yeah, so practical and so topical for so many of us. So I think that's really, really true. And I know you're quite close to watching the flows of money coming in and out of South Africa. So can you maybe talk to us about some of the trends you're seeing there, not just in inheritance specifically, but just in general?
Yeah, sure. So I'm a bit of a nerd. I like to analyze numbers a little bit. So we get a report from the South African Reserve Bank that just gives us the numbers every year that are moving in and out of South Africa. What we saw since COVID actually has been quite interesting because the trends have shifted a little bit. So maybe just to give some numbers. So on the annual allowances for South African residents, South Africans moving money out of the country under their allowances, the single discretionary and foreign capital allowances, we've seen that steadily increasing. In 2020, there was about 130 billion in total that was externalized. 2021, we saw 160 billion externalized by South African residents. And this year, and in 2022, we saw about 140. So although investing offshore slowed down because of the markets and the exchange rate, it's still a significant number and far more than 2020. On the immigration side, so for South Africans who had completed that tax immigration, tax migration, financial immigration, there's various terms for that process that people refer to, but we saw those flows actually slowing down last year, which is interesting. And there's a couple of reasons for that. Obviously, the regulation changed in 2021 around tax migration and how that works. And then the last one was inheritances. And what was interesting is for the first time ever in 2022, we saw that inheritances leaving South Africa had exceeded inheritances coming into South Africa. And, you know, I think that's also why this is becoming such a popular topic. I think it was around 5 billion last year that went out of South Africa on inheritances, which is a reasonably large number.
Wow. And I mean, why do you think that is? Why do you think we're seeing that trend shift?
I think it's common knowledge that a lot of South Africans immigrate, and over the years, I think that that's just been a trend. And so, like we were saying earlier, they become global citizens, but there's still South African estates that are sitting here. So when, let's say, Granny passes away, all the kids are sitting around the world, and so the South African estates are paying more now to beneficiaries offshore than what they were before, and that seems to be increasing as a trend.
That makes a lot of sense. And I recently listened to a podcast between Georgina Smith, who's our head of distribution, and Gillian Hepburn from Schroders in the UK. And what Gillian shared was fascinating for me. She said that in the UK, 65% of wealth that changes hands due to inheritance will not stay with the same advisor. So if someone passes away, money goes to the kids aren't going to keep the current advisor or the parent's advisor to look after that money. Do you think that that's a trend that plays out in South Africa, and perhaps to an even greater extent because, you know, the money's leaving us, it's going offshore?
Yeah, I think it's incredibly challenging for the financial services businesses in South Africa to retain those beneficiaries as clients. We see most of the time, we do a lot of inheritance payments, and we see that when those funds are paid abroad, generally they're spent and they're not being retained in an investment form. And so I think even if that beneficiary has an advisor sitting elsewhere in the world, generally the South African advisor or wealth business is not retaining those funds and that wealth, which is not ideal.
Yeah, and very worrying for advisors, I would think as well, especially if you're sitting on an aging client base. I mean, is there anything you think we should be doing more of in that space as an industry, as a business, if you were a financial advisor, to try and keep hold of those assets and make sure that you can still kind of manage the wealth intergenerational?
Yeah, I think you could possibly preempt, firstly, the beneficiaries down the line when you're doing the estate planning, and maybe they can become clients too, or at least have a plan of where those funds go. I think it's challenging because a lot of the financial services institutions in South Africa insist also that the advisor must be phase compliant and registered as an FSP within South Africa in order for the client to invest with that financial institution. And so that also becomes challenging for the beneficiary if they're sitting abroad. So I think we maybe need to just, in the industry itself, put our heads together and figure out how we can be better at retaining that wealth within South Africa for everyone's benefit.
Yeah. Yeah, and as you say, we're so much more globalized than we used to be. So potentially it's time to kind of apply that thinking into our industry a little bit more as well. Yeah, that's true. So if we go into the details of the inheritance process, can we first talk about the inheritance of an offshore asset by a South African resident and how that would work?
Yeah, so this is an interesting one, and the regulation changed last year, which I think alleviated a lot of stress for the platforms, because this was always a topic that came up a lot. So traditionally, if you inherit an offshore asset as a South African resident, you would have to do an application to South African Reserve Bank to say, I now own an offshore asset. And that the Reserve Bank needs to note that, because you didn't use your annual allowances to externalize those funds to obtain that offshore asset. That regulation changed last year. So now SARS is very smart and they have a CRA system. And so they can actually pick up that you have that offshore asset now. And so you're no longer required to do that application to South African Reserve Bank, which is actually good for us because the Reserve Bank is freed up in terms of number of applications. So other applications are going through a little bit quicker. And it also means that when you do your tax return, you include that offshore asset and everything is compliant. There are some rules around that in terms of when you have to do that application for the Reserve Bank still. So that's important. But I think for, the big financial institutions, a lot of them were insisting on the SARB approval in order to change it into the beneficiary's name. And so it was making the process slower, but they were trying to do it the right way. And so that became challenging. But I think now for financial advisors, it's a much easier process to guide their client through, which is obviously great.
Yeah. And you mentioned a specific date when the regulation changed. So if you inherited before that date, do you still have to go through the old process?
Yes. So the date is the 23rd of February, 2022. If you inherited an offshore asset before that date, you still have to do a SARB approval or application to the Reserve Bank to request approval for that asset to remain in your name. That's very important. And I think a lot of people in the industry don't know that, and clients definitely don't know that. I mean, how they would know that, I don't know. So it's up to us to inform them and educate them on that. Because if you don't do it, there can be consequences to that and can be difficult to correct. So it's very important.
And what are some of the consequences? If you didn't know, you just changed the asset before this regulation change and never went to the Reserve Bank?
So we have seen clients that have incurred penalties from the Reserve Bank for not having that asset reported to them. And like I said, they do pick up on it now. So it's not something that you can hide from them. And we also see that some authorized dealers or banks actually don't want to help you remediate that, and that they don't want to do the application to fix it because they don't, the process in fixing it is then proving that the person that you inherited that asset from externalized their funds correctly under their allowances. And sometimes that can be almost impossible to show or prove because banks only have to keep their records for 5 years. So it's very challenging. We've helped a lot of clients through that process over the years, but some banks, unfortunately, and authorized dealers stay away from it unless it's easy to solve and to submit. So it can be really challenging. It's very important that we give our clients the right information and make sure that they understand they've got to do that application.
Yeah, for sure. And tell me, if the inheritance comes from an offshore estate, so granny's living in the UK and she leaves some money to kids in South Africa, and that money is offshore, does that change the process because the estate was an offshore estate?
No, it won't change the process for the beneficiary. So from an exchange control perspective, we look purely at the residency status of the beneficiary. So the estate offshore can pay it through to South Africa. We can do the conversion on our side and then transfer the rands to the beneficiary. And we would effectively look at the residency status and record it accordingly to the Reserve Bank based on the BOC category that applies. So it doesn't really change it at all.
Okay, that's good news. And let's say that the person who inherits the money in South Africa wants to bring the money back. They want to spend it, or they want to, I don't know, pay off their bond or something. Is that possible?
Yes, they can. Definitely. We do a lot of those. Like I said earlier, often beneficiaries want that inheritance in and to spend it. Hopefully it gets invested. But yeah, so we do a lot of those transactions too. A lot of people don't want to keep that offshore asset. So they will withdraw as part of the estate and then we'll bring it back for them.
Okay. And how does that process work? Do I just tell the offshore estate to pay it into my bank account and, and it arrives and that's that?
So yes, you can do that. So a lot of clients unknowingly will just give their South African bank details and say, please, can you transfer the money into my bank account, and the state pays it.
I saw you made a face when I asked that, so I presume it was.
The thing I think that a lot of people don't understand is the exchange rates and what they are charged with for a foreign payment. In that scenario, the overseas bank that the attorney or the estate is with will do that transfer. And the fees on that in terms of the exchange rate alone will be 2 to 3%. So it's incredibly expensive. So for the beneficiary to get as many rands as possible to South Africa, you want them to get a good exchange rate. In the intermediary space, your fees, you save between 1.5% and 2% on those exchange rate fees. So there's a huge benefit for clients to go through a specialist for these transactions, because sometimes inheritance payments can be very large. And if you're inheriting pounds, that rand value is quite significant, especially at the moment. The exchange rate's not great. So generally what we do is we'll assist the clients in facilitating that and making sure that they get a good exchange rate, and then we can pay it to their primary bank. So it's not that they don't get the money there, but it's just the facilitation of the exchange that's important.
Okay. And they do that by opening a new bank account with a foreign exchange partner like yourselves?
Yeah. So what we can do is we can have, let's say it's pounds. Let's say it's coming from the UK as inheritance. We can open a pound account for them. Those funds will come in and then we will guide them through. So we'll give them access to a dedicated dealer like the other FX intermediaries, who will then keep them up to date on the exchange rate. The client then has an option to execute when they feel that they're at a level that they're comfortable with. Very often with inheritances, though, there seems to be an urgency around doing the conversion. And then once we've done the conversion, they will tell us where to pay those funds. We obviously onboard them from a FICA perspective, but we can pay the money, the rand, straight into their primary bank account once it's converted. So it doesn't really delay them. But it gives them an option and more control over that conversion of the funds, which I think they like, instead of money just arriving and not understanding how they got to the rand value that they got to.
Yeah, no, I think that's so true. And I mean, the reality is that, we're not experts sitting on the other side of the fence. And also we can't watch the exchange rate all day. I know it's quite depressing at the moment if you do that anyway, but you can't constantly be logging in and checking is now a good time to do the conversion. So and obviously getting a good rate is just so important, as you said.
And I think exactly. I mean, our FX dealers, they sit on the desk all day and watch the markets, and they will put those desired levels into the system, and when it gets close or triggers, they will let either the financial advisor know or the client know, depending on who that primary contact is. But the key there is that we free up the client or the wealth manager, whoever our partner is, so that they don't have to sit there watching the rate all day. Because like you say, I mean, if that's not what you do as a primary function every day, you don't really have time for it. And the rand is incredibly volatile, so you can miss it in a heartbeat.
Yeah, I think I always do when I'm trying to move money anyway. So now tell me, what happens if the money's offshore, someone's inherited it and they're in South Africa. They want to keep it offshore, but they want to move it to a different asset. So let's say it's sitting in a bank account in Europe, and they want to say, for example, open an investment account with Innate offshore. So the money's staying offshore. Would they need to bring it back to South Africa and then reinvest it again offshore, or can they just move it straight over?
As a South African resident, you should bring it back. That's what they ask for. Although SARS CERA system can pick up that movement, and the Reserve Bank wants it to come back. The challenge for South African residents in bringing it back is obviously then you bring it back and it goes into rands from whatever currency it was in, and then you rebuy and reinvesting, which is not ideal. So the best solution there for the clients is that we open a foreign currency account for them, so that, let's say it's dollars, for example, we can open a locally domiciled, South African domiciled dollar account. You can actually do quite a few currencies on the local side, which is really helpful. So the funds will come into the account. It's in the client's name. It's in South Africa, but there's no conversion. And then we can send those funds straight back out again. There's certain categories around reasons for transactions where you have to convert, but there's also some where you don't need to. And disinvestment and reinvestment, you don't need to. So we can really bring it in and then send it straight back out again, so that they don't have that cost of the double conversion.
Yeah, and the risk of the rate, obviously.
Yeah.
And in that instance, does that count as part of your foreign allowance if you bring something in and take it back out?
It doesn't, no, it doesn't.
Okay, that's also good news.
You can bring money in and send back out again, yeah.
Okay, and if you inherit an offshore asset and leave it where it is when you inherit it, does that count as part of your foreign allowance? So let's say you inherit 5 million rand from Granny in a offshore account and you're going to leave it in that offshore account. That doesn't count for your foreign allowance either.
No, it doesn't. It's actually recorded under inheritance. So no, it doesn't count as your foreign allowance. So a bit of a bonus. You still have your full 11 million you can do for the year.
Yeah, I mean, it feels like a bit of a loophole. But yeah, as you say, SARS can see everything these days. So yeah, you probably can't escape some sort of making sure everything's above board. Okay, so if we move on to the other side of the story, which is South African inheritance that's moving offshore, perhaps a good place to start, and I'm sure a lot of our audience knows this, but it's still good to just brush up on it, is what are the process and the limits when it comes to moving money out of South Africa offshore?
Okay, so as a South African resident, you have your annual allowances. Everyone really knows the basics around that. So as a South African, I can move R1 million within a calendar year. That's very important. And some people get confused around that, which is why we provide technology to our advisors to help them manage it. So every calendar year, 1st of January, end of December, you get R1 million under your single discretionary allowance. You only need to provide FICA and you can move R1 million. There's no additional requirements under that. The second allowance for South African residents is your foreign capital allowance, again, within a calendar year. And that is for investment purposes. And you can do up to 10 million rand per calendar year under that allowance. But you need a tax clearance certificate in order to use that allowance, which is not difficult to do. That tax clearance certificate is really showing source of funds and that you are tax compliant. So if it's salary, you're going to give pay slips. If it's a bonus, you're going to show proof of bonus. And then you get your tax clearance certificate showing that you are compliant and you have the funds, and then we can externalize. And you effectively applying up to 10 million for the value that you can show you can afford or that you can prove. And then there is another allowance that is a special approval. It falls within your investment allowance. And although it's called special, it's not really that special. We do quite a lot of them. And South African residents can apply to externalize more than the 11 million. And a lot of people don't know that. So that's a two-step process. The first part is that we do an application to SARS and we get a PIN letter. The great thing with the application to SARS is it actually gets dedicated or gets allocated to a dedicated consultant for us, so that we deal with that consultant on behalf of the client to facilitate the application. They can dig a little bit deeper because usually those applications either involve a trust, a source of funds, or a company, maybe that sort of thing. So they will ask for more documentation, but if everything's above board, there's no reason for them not to approve that. And then after we get the PIN letter, we then go to the South African Reserve Bank and we put a motivational letter together to get it approved with them. And that is really showing that we got the PIN letter from SARS, how much we want to send abroad, and where is it going? Where are we investing the money? And you're basically trying to motivate why you're externalizing the value that you are, and the approval comes through. We've never had one declined in all the years that we've done these, and we do quite a lot. And there's no limitation on the value. So we've done from 30 million to 500 million.
Wow.
There's really no limitation. I think the key there is we always make sure that everything is above board and 100% before we submit, so that the process is quick and we don't have back and forth in declines and waiting and delays. Once you have the approval, it's valid for 12 months. So you have 12 months to have a strategy. For those sort of values, you really want a strategy in terms of the exchange rate. Maybe you do in tranches, maybe you look out for a desired rate level, etc. We'll help clients with that. But it's important, I think, to have a bit of a strategy there. And obviously you want to look at the exchange rate, the pricing, make sure that it's good for your client because it's a large value. Yeah. And then I think not necessarily allowance, but the last one would be the tax migration / tax immigration / financial immigration. There's a lot of terms used for that process, but effectively that's sort of the last way in which those funds can be externalized as a South African living abroad, depending on their status with SARS.
So does that mean if you are no longer a South African tax resident, so you've gone through that tax exit process, that you can take money out of South Africa under a different process than a normal South African who's still South African tax resident?
Yeah, so once you've completed that process, so when you do the process initially, you can immediately move all your liquid assets, so whatever is readily available. But that is only valid for 12 months. That's a TCR01 that you get from SARS. After the 12 months, you can apply for a tax clearance, and that will give you, you can apply for up to 10 million Rand a year under your non-resident status with SARS. So you're still limited. It's effectively like your foreign capital allowance, and you still have to go through the process, but you're now not a non-resident taxpayer effectively. But I think we'll go into a bit more detail around that later.
Okay. And I mean, something that we obviously seeing a lot of, and you mentioned it a little bit earlier, is a lot of South Africans living all over the world. And I think quite a lot of inheritance, being inherited by, kids or grandkids, etc., from their South African parents or grandparents. So effectively, someone living offshore inheriting a South African asset from a South African estate. What are the kind of complexities and the various scenarios that we need to think about in that situation?
So the most important thing when we're dealing, so we do a lot of these payments, and the most important thing, and actually we struggle with this a lot, is the first thing we have to do is understand that individual's residency status. And it's surprising because I think people don't understand what that is. A lot of South Africans assume that if they've been living overseas for 15 years, that they are a non-resident. And unfortunately, in South Africa, from a financial standpoint, that's not necessarily the case. So our primary, the first question we always ask is, have you completed tax migration? Yes or no? Do you have a green barcoded ID? If they have a green barcoded ID and they haven't done the tax migration process, or previously called financial immigration, then we can use their allowances. So it's really simple. We'd open a bank account here for them. We would get the state to pay the funds out. We get the FICA and we send the funds abroad. So that's pretty straightforward. We do see a lot.
Lauren, is that even if that person doesn't have a South African tax number?
Yes. Yes.
Wow.
If they need it for whatever reason, we can reactivate tax numbers. It's actually not difficult. If they never had one, we can get one for them. So that's not an issue. We see a lot of scenarios where we get sent the old blue ID book, which unfortunately is no longer accepted. It's a green barcoded ID, or those lovely smart cards, back and front. And then we can process it. But the blue ID books we see a lot of, and some really interesting photographs, but we can't use them, unfortunately. So if we're in a scenario where we have a South African living abroad, and they've been overseas for 15 years, they don't have a green barcoded ID, but they have not done tax migration, they're going to need to do that process in order to receive that inheritance, to become a non-resident taxpayer, because we don't have proof of them being a resident in South Africa. So we have to go through that process. And we can do that for them. That's fine. And usually when they've been overseas for a while, it's not difficult to do because they generally don't have assets here anymore. There's not much to do in terms of tying up the tax returns. So it's quite simple and we can facilitate that. I think the challenge there, what we also saw was clients that had done tax migration. That's easy. So if you've done it already and you're getting an inheritance, then we open a non-resident account and we can pay the funds over. So that's not too difficult. It's just the ones where the residency is a bit iffy because we don't have agreed barcoded ID and they haven't done the tax migration yet.
Yeah, and I mean, I think for all of those of us who haven't been asked for ID to go into a bar for a while, which I'm hoping is most of our audience, it's definitely me. You sort of think, oh, that ID, it's not really useful, you know. So I think if there's any message, a practical message out of the webinar today, everybody keep your green barcoded IDs or your smart cards, whichever you've got. Tell your clients it's really important. And I think, you know, if they don't have one, when they come back to visit South Africa, you know, you can, I think you can even get one and apply online these days and do it at the bank. So, I mean, that's something you never hear of. You know, you never get asked to produce your ID for anything, you know, as I said, at the age of 25. So, I mean, that's fascinating. And I think a lot of people also won't realize that they are considered a South African tax resident. So let's say you know, you went to school and straight after school, you went overseas. Lots of people do that. Never paid tax in South Africa, never even got a tax number. But now, you know, 30 years later, you're going to inherit something. And because you're in whatever passport you've got now, your German passport says you were born in South Africa, you are still considered a South African tax resident, and you have to either produce the green ID or go through a tax exit process.
Wow. And that's interesting, you know, we have that scenario a lot where someone will say to us, no, I'm German, I've got no ties to South Africa, I have a German passport, I don't even have a South African passport. And they'll send it to us, they say, I barely speak English, but the German passport says born in South Africa. So then we have to go through the process and explain that that actually is a problem because it says born in South Africa, we have to apply the process. So yeah,
no, I think a lot of people wouldn't even consider that. And this tax exit process, I think, is something that's quite daunting for a lot of people and comes with a lot of kind of horror stories or kind of rumors that go around about it. So how does it actually work? So as far as I know, you've got to prove to SARS or the Reserve Bank or somebody that you've left the country. And then, you know, there's some tax element that comes into it. And how does that work? How do you prove you've left? What are they looking for? I went to a fascinating series of lectures years ago. Some people on the line might have been there with me, I think. And we were talking all about these things. And they said the one case came down to where have you left your slippers? And the final judge said, if your slippers are still in South Africa, sorry, my friend, you have not officially exited South Africa and you still need to be a tax resident. But I presume it's not that complicated for us ordinary people. How does it usually work? How do you prove you've left?
Okay, so there's two basic things you provide. So the first thing is in your passport, when you leave, you get an exit stamp. So you need to send a copy of that. So obviously your basic FICA and your stamp on your passport, your exit stamp. And then you've got to prove that you're paying tax in the country that you reside in. So you're now a foreign taxpayer. And the way that you do that, the only document that they will accept is that foreign residency tax certificate. And a lot of people are overwhelmed by how to get hold of that, because I think in some countries, even first world countries, you don't readily get given it. We do guide clients through that. There are websites and links that you can use to apply and to get it. So we can guide clients through that, but we need those two to prove that you have exited. That's the first part. Then you go through a two-step process. The first one is that you need to get a tax clearance in respect to immigration. That's an RAB01. And that is ceasing to be a tax resident. So now you're saying I'm a non-resident taxpayer. Then step two is that you've got to declare your worldwide assets and liabilities and go through that tax process in order to get your TCR01, which is effectively allowing you to externalize your liquid assets, and it's like a tax clearance. And then you're doing your final tax return, you're going through that whole process. It's important, though, for clients to understand that you don't have to sell your assets when you do this process. You can keep your assets in South Africa, but obviously CGT is triggered because you're becoming a non-resident taxpayer. Okay. So if you want to externalize down the line, let's say you have a house in South Africa and you decide you're going to sell it. You don't want it here anymore for whatever reason, and you sell it, and then you would like to externalize those funds to the country that you're currently residing in. then, and what happens is your TCR01 is only valid for 12 months. That gave you the ability to originally move your liquid assets or your liquid funds at that point in time. So now you've sold the house, you want to externalize those funds, let's say it's 5 million Rand. You can do a tax clearance application for up to 10 million Rand, which is valid for 12 months as a non-resident taxpayer to allow you then to externalize those funds from the house, the sale of the house. So you always have the ability to move funds. And that process is not too onerous once you've gone through it. And we do quite a lot of those. I think it's also important to note that from an inheritance perspective, you don't need that TCR01. You don't need the tax clearance either. So inheritance is a dispensation. So clients can complete a declaration and then they can move it offshore. It doesn't form part of that process.
Okay. And then I think something is a perception of a lot of people, certainly was mine for a long time, is that when you immigrate, there's this extra tax that SARS is going to charge you. So it's almost like a punishment, last bite of the cherry. Before you go, we're going to levy an extra tax, like a 10% tax or a 20% tax, on your assets on your way out, while we slam the door in your bum. That's not true, right? There's no immigration tax per se.
No, there's not. You're literally just changing your status and SARS is applying based on your status. They don't penalize you with extra tax. The CGT obviously kicks in. And everyone's scenario is different. That's important to understand. But there's no penalty for immigrating, for becoming a non-resident taxpayer. That's not what's happening. So that's important. And I think that the implementation around the new regulation was the right thing to do. I think that they've made it easier for clients. Although it took a while for everyone to understand it, it seemed a little bit more complicated. If you go into the reasons and the changes for clients and how that shifted based on the new regulation, I think it actually in the long term benefits South Africans more.
Okay. And so that CGT is basically saying that if when you do your final tax return, you're ceasing to be a tax resident and you're still, let's say, holding an investment worth 5 million Rand, that has 1 million Rands worth of capital gain. It's going to be as if you had withdrawn that investment when you finalize that tax return, and you're going to pay CGT on that 1 million Rand capital gain, because is that how?
No, not necessarily. It depends on what that is. So where those funds are sitting. So what we do with our clients is when they come to us and say they want to do tax migration, we let them do an assessment. So it's like an online assessment that they complete, which gives us sight into what they are sitting on in terms of assets. Then we guide and we say to them, this is what's going to happen. This is because I think what's important is there's a lot of panic out there, and there are businesses out there that may create panic. Get your money out while you still can, complete the process. And that's, I think, very scary for people because, we work in financial services, so we're relatively well informed and we know the basics around this, even if we're not specialists in this realm. But I think for the man on the street to hear that panic, it's quite scary. So what we try and do is just give clients the facts and allow them to make their own decisions based on where they are, because everyone's situation in this process is completely different. So no one's ever got the same approach or the same current situation. So I think you've got to handle it case by case. But yes, from an investment perspective, it would depend on what that is in terms of what the implication is.
Okay, that sounds like good news. And then the one scenario we didn't talk about in terms of inheritance is if there is someone with no ties to South Africa who inherits an offshore asset. So let's say someone's immigrated, their kids were born in another country, so no reference to South Africa on any passport, no ID, nothing. How does the inheritance of a South African asset work for those people?
So easy. We love those. So effectively, if you were never born in South Africa, you have no ties to South Africa, you are a bona fide non-resident is what they call you. And so what we generally do as the easiest solution is we would open an account in the estate late name. So the person itself, the estate, we will open an account. The estate will pay the money into that account, and then we will obtain the beneficiary details offshore of that beneficiary that's receiving the inheritance, and we pay it over. Because generally what we find with bona fide non-residents is they don't want a bank account here. So we don't really want to put them through that process. So we can just do it through the estate. All we need is obviously all the supporting documentation around the estate, so the L&D, etc., because we need that from an exchange control perspective. the exchange control teams will encumber those funds until they've gone through the documentation to validate the transaction, and then they will unencumber it and let us transfer the funds over. But that takes about 24 hours, so it's not too much of a delay.
Okay, great. And then, I mean, we've sort of alluded to in our discussion that this whole process has changed quite significantly over the last couple of years. So we used to have something called financial immigration, which was a whole different process and involved the Reserve Bank, as you say, and probably quite an onerous process for people. And that's fallen away entirely. And we now just have essentially a tax exit process. Can you talk us through what some of those main changes are, what they kind of mean practically for advisors and their clients, and just anything that you think people should look out for in that process?
Yeah, I think people were very nervous and found that learning this new process was quite onerous. But if you look at it in terms of the client, I think it's better. Maybe the client doesn't necessarily feel that way on some aspects, but I think that it is. I mean, effectively now, you don't have to do an application through a Reserve Bank and have a tax element. So that's the first part. The process through the South African Reserve Bank wasn't difficult. It was quite easy. But the problem was that then you had a blocked RAND account. And the challenge with a blocked RAND account is that then meant that going forward, you could only move funds through that account. You were not allowed to have any other bank account in South Africa, regardless of the fact that you were a non-resident. And say, for example, you did get an inheritance 10 years after doing financial immigration, you would have to move the funds through that blocked RAND account and out in order to get the funds to where you currently reside. And the challenge with that, we found a lot of clients coming to us saying, I had a blocked RAND account with my bank in South Africa when I moved, and I can't get hold of anyone, and there's a time difference, and I'm getting call centers, and I can't remember the account number, and I don't know what to do they're telling me I need paperwork for exchange control, and it became a nightmare. We ended up having to do applications to Reserve Bank to give us ownership and let us do another blocked RAND account, but you've got to do an application for that. And so it just became very difficult for South Africans living abroad. So that's a big shift. Now we just open a non-resident account effectively. And clients can just change, they can keep bank accounts and change the non-resident status. So that's a lot more helpful. You do now declare worldwide assets, and we have the CRA system. So they do pick up on everything, but I think that's also a benefit for us. So, they can pick up on everything. Everything is black and white and transparent. There's nothing to hide there. And obviously the big fundamental change was around the RA. So withdrawing your annuities, you have to be a non-resident taxpayer for 3 consecutive years in order to do that withdrawal. Yes. And a lot of people were terrified of that. It became the perception of it being, a terrible thing and very difficult, and South Africa trying to keep their money. But I can tell you that on our side, we help a lot of South Africans going all over the world. And the trend that we see is that they leave and they go and they struggle financially in first world countries, because sometimes it can be more expensive. And so they will do this process to withdraw that RA, spend the money, and it doesn't work out, and they come back to South Africa. And now they don't have anything. They've got no support from a retirement perspective. And that can be quite scary. So the 3-year rule really is to just try and delay that process, but they do allow you to backdate it. So if you start this process, this tax immigration process now, but you've been living overseas for 5 years, you can backdate and say, actually, I'm a non-resident taxpayer for 5 years. Then they'll allow you to withdraw. So yeah, I don't think that it's all bad. And I think there's reasons for the decisions too.
Yeah. And what I find so interesting at the beginning is you said you can actually see the impact of that regulation change in the flows of immigration, the tax exits, because no one's bothering because they've got to wait for the 3 years. And when the 3 years come, probably put that date in your diary, because your team's going to be absolutely inundated with everybody realizing, great, now I can access my retirement savings. I better get my tax exit done. It's fascinating to actually see, regulation showing up in real life like that. It's really, really amazing, actually. Cool. And is there any tax implication for the beneficiaries who inherit that money offshore? So I know, we always talk about double taxation and, whether we've got an agreement with another country, depending on where that beneficiary lives. Is it possible that a beneficiary could be taxed, when they receive the inheritance, as well as obviously all the estate duty and things going off on our side?
There's quite a lot of detail to that. So it really depends on the jurisdiction that they're in. I mean, and their status, residency status within South Africa too. That's important. So I think in those scenarios, the best thing to do is to talk to a tax practitioner to give you that guidance and to explain based on where you are, what the implication would be. But it's important to also look at your status within South Africa because that will also have an impact on it. So yeah, I mean, there's 91 jurisdictions that the CRS is looking into. And so it gets very complicated. But I think if you focus on just what's applicable to you, your tax practitioner can help you through that.
Yeah, and I think important for advisors and their clients to start that process as part of the estate planning process. I mean, you'd hate to, do a whole estate plan, your client passes away, and then, one of the beneficiaries gets half of what was intended to them because there's some tax consequence because of where they live. And if you'd structured it differently, potentially you could have mitigated against that.
Yeah.
So just an extra element of complexity that I think we need to take into account in that process. And if we talk about estate planning, something that I always think about is a trust and an offshore trust. And it sort of felt like it was a really like a secret clandestine operation for a while, and SARS really didn't like them. But, trusts still seem to have a really big place in terms of estate planning and intergenerational wealth transfer. And I mean, I know you mentioned to me there's actually been a really interesting development in terms of trusts offshore that maybe we should share with everybody.
Yeah, so traditionally, and again, these are the updates in terms of how we're operating with SARS, etc. It's giving us opportunity to do more as South Africans. And so you can now, before you were not able as a South African resident to use your special approval. So if you apply for more than the 11 million as your special approval, you could not transfer those funds into a trust offshore. You can now. And that's quite a big shift. I think for high net worth individuals, a lot of them do have offshore trusts, family trusts, and not being able to use a special approval to place those funds into that trust limits them to the 11 million rand a year, which is not ideal. And now you can actually use your special approval to pay funds into your offshore trust, which is quite a big shift.
And is that quite a recent change, Lauren?
Yeah, so that came in last year. But again, not a lot of people are aware of it. These things are not advertised unless you're looking for it. But we have seen quite a lot of interest from our clients in that shift because they've had to place the funds elsewhere. And remember that when you do a special approval, you're applying for where you're placing the funds. So you can't send it offshore and then move it around. So it's ideal to now be able to send it to the trust if you want to.
Yeah. Sure, that's so interesting. I mean, I kind of pride myself as another regulatory nerd like you about everything that's happening, but I'd never heard of that. So as you say, these things happen, and it can be really, really important to clients if you just know that change has taken place. All right, quickly before we wrap up, Lauren, I think just a practical question. So let's say we've got an advisor sitting in the audience and one of their clients passes away, there's inheritance that needs to be paid offshore. Practically, what do? How do they kick off this process? It can, I'm sure, feel really, really daunting to someone in this situation who hasn't done it before. Yeah.
So the best thing to do is, if you're using currency partners, you can just register the client on the website. Either you can get the client to do the registration, or most of our wealth partners do the registration on behalf of their clients. And in that registration, you're giving us your client's residency status. You upload the client speaker and part of that registration. We don't need selfies and those sort of things. We will use DocFox to verify the feature. Yeah, we try and do things digitally and quick and easy. And once we've got that information, we will start that process. So based on what we see of the clients and where they are currently and what's required, we will either come back to you asking for supporting documentation, or we will complete the forms that are applicable and we will send them through for digital signature. If they don't want to sign digitally, they can print and sign and scan, and then we open the relevant bank account on our side to be able to facilitate that payment. But we keep the primary contact on that account up to speed throughout the process as we're going. And we've obviously got a client services team and specialists throughout the office, and we are based around the country, so we can be there on hand. So if you want to meet with someone and talk through it, we can help too.
Yeah, I think that's so important to some people when they're going through a situation when there's inheritance at stake. It can feel really, really scary, I think. Thank you so much, Lauren. We're going to move on to some questions in a minute. I think my big takeaway from this certainly is keep your green ID, find it, everybody, photocopy it, certify it. But also the devil's in the detail. So yeah, there's a lot of ins and outs and absolutely fascinating. But yeah, you've really got to know what you're doing and make sure that you do it right. So before we move on to some of the questions from our audience, I'm very excited to just do a little punt and announce that we've got our next webinar, which is In the Room with Peregrine, and that's on the 4th of April, hosted by Steve Backhouse. And they'll be discussing how hedge funds can help smooth the ride for investors. So for me, I'm a very risk-averse person, and I think hedge fund, and I think, oh, that sounds like a really risky ride. So I think that's a misnomer. I think a lot has changed, and I mean, we've seen, I think, hedge fund had a better year last year than they've ever had in South Africa in terms of support and assets. So I think that's going to be a really, really fascinating one. Invites are going out today, I believe. So if that's something that interests you, please sign up for that. And we'd love to see you there on the 4th of April. Right, now that bit's done, let's have a look at our questions. Let's see what's come in over here. Okay, so question number 1. What are the money movement trends post big events over the last 12 months in South Africa, e.g. the S&P downgrade, the grey listing? So those big things that we read about, we actually did a webinar on grey listing here, and it was very doom and gloom. It was not my most fun webinar. Do we see those things playing out in the money moving, or does the market preempt it, or is there just so much going on it's hard to pick that stuff out?
Look, effectively, those market events affect the exchange rate for South Africans, depending on what it is, and that affects the movement quite often. But what's interesting is that, despite the rough year we had last year, where investing offshore slowed down dramatically, people were very nervous. Markets around the world weren't performing very well, and so people sort of hung on to their money. It got more expensive to live. It still is. Inflation is a challenge everywhere at the moment. So we saw a big slowdown last year on investing offshore, and that has picked up a lot this year. But we talk about it a lot. Although the exchange rate is volatile, and at the moment the rand is very weak, it's becoming much easier for people to invest offshore. And I'm sure a lot of wealth managers out there and financial advisors will say that their clients ask about it now. So it's no longer this very specialist thing, really. People can read about it. Banks are launching apps to transfer money abroad. Investing offshore overall is more accessible. People are educated on it. It's happening more. So although the exchange rate is weaker, we're seeing more clients that are moving money offshore, and that volume is growing. So it's difficult for us to measure that movement on trends, because all that's doing is impacting the exchange rate and then the demand to move. But the psychology around that too is very interesting. So if you look at where we are now, we were at 1850 on, I think, Monday, or when I came in even yesterday. We're sitting at 1815 this morning, and our dealing desk is mad. The phones are ringing, people are excited. Even if they're not executing, they're asking questions. And so now, if you can get under 18, that's an amazing rate. So
I mean, if you told us that in November, no one would have believed you. It would have just been, no ways. It's so fascinating. The psychology behind all of this is fascinating. And I suppose it's almost that opportunity cost. We've kind of, I think maybe in our minds banked that the days of 17 are behind us, and we just got to, we got to do the best we can around the 18 mark. That's really, really interesting. Awesome. Let's move on to our next question. The question is, so do you only do the SARB application if a foreign asset is inherited and kept? And I'm not sure what I don't know what we mean by kept. Does that mean you're not bringing it back?
You're not bringing it back, right? So if I inherit let's say my grandfather passes away and I inherit a unit trust with Alan Gray, random example, effectively, if I want to keep it offshore and I want to move it into my name, I have to do the application. If I want to bring it back, there's no application required. If it's before the 23rd of February 2022. If it is after that, I don't have to do the application anymore.
Okay. Easy. Right. Next one. Can you share more information on the double estate duty agreements and whether that may change or increase in future? I say increase as it feels as though there is a small list of agreements with South Africa. I'm not sure what a double estate duty agreement is. Lauren, are you aware?
No, I don't think I can comment on that. I mean, that's not really my area of expertise. I think
Potentially it's referring to the double taxation agreements.
Yeah.
I don't know. I suppose that's a pretty interesting question. We've talked a lot about our fabulous CRS system and how SARS is hooked into these other 91 countries around the world. I presume as we all get more connected like that, it should naturally feed into more double taxation agreements being put in place as the countries work closely together from a tax perspective. That sort of feels like a natural evolution to me.
Yeah, I mean, look, it's not my area of expertise. I'm not sure on that at all. I think I would advise that the clients chat to the tax practitioner. We do have a team in-house that can assist. It's difficult to forecast these things, though, in terms of what that will be and what will happen. I'm not aware of anything at this stage, though.
Great. All right, next question we have, if South African miners inherit an offshore asset, so somebody under 18, are they able to keep it offshore? If not, how easy is it to get, if so, how easy would it be to get the SARB approval if needed to keep those assets offshore? And I think that's a really interesting question, because I think if I stand to be corrected, our innate offshore products, you can't be a miner and invest. So yeah, what happens if you inherit? Is it different?
So you cannot be a miner and invest, you're right. But yes, you can retain it, and which is interesting. We're actually busy with an application for this at the moment. So I think Jennifer, maybe also for the NA team, I'll chat to them about it. But we have had an application we're doing at the moment, and it's 2 miners. They've inherited an offshore assets. We've done the application. That is also a change in regulation that came in last year, that they can retain it offshore. There is an application. It takes 6 to 8 weeks to get that through. And you've got to provide supporting documentation around how it was originally acquired, so that those annual allowances being used for the externalization. And yeah, we can retain it offshore as long as it's recorded under their name, which is actually really great news, because I think that scenario comes up when we think.
It again feels a little bit inconsistent that you can't invest as a miner in your own name, but you can inherit. I suppose the money's offshore already, maybe is the thinking of the regulator. But maybe it's heralding good things to come, and miners might be able to invest offshore. You know, maybe they're looking at all those rules. You never know. We've seen so much change there.
It's a good thing for South African financial institutions, because it means that they're retaining it. Those miners, if you bring the money back, we don't know what they'll end up doing with it. Then maybe they move abroad too. So I think it's a good thing that they have the ability to keep it and to retain it. Even if it is something offshore, it may be with innate offshore as an example. And so then they're able to retain it. That's a good thing for us as a country.
I agree. Really good question. Whoever asked that question, that was really useful. Thank you. All right, this question's got some codes in it. I'll see if I can get these codes right. As a non-resident, if your TCR 01, I hope I got that right, 12-month period has expired, can you apply for special clearance? And are the same terms applicable to this app? i.e., can SARB request you to bring the funds back to South Africa?
Sorry, I don't know if I'm understanding the question. So the TCR01 allows you to do your initial externalization. So that's, you're now a non-resident taxpayer. You can externalize your liquid assets. If that expires, you can do an application for up to 10 million rand tax clearance application as a non-resident taxpayer to then externalize funds. It sounds like, from what I'm understanding, they're concerned about having funds already abroad.
It sounds like there's a concern about whether the Reserve Bank can make you bring funds back to South Africa. And I don't think they can. I haven't heard anything from you that suggests.
If it's recorded correctly under whichever status you're under, and let's say you have done tax migration, and the key there, I think a lot of people misunderstand, is that when we externalize those funds, we're recording that to Reserve Bank. We have to provide all the supporting documentation according to that individual status and the source of funds. And we record it to the Reserve Bank under the relevant BOP category. We show them the beneficiary that it's going to, the ID number of the sender, et cetera, so, or passport number. So it's all recorded and above board. There shouldn't be any reason for the SARB to say you need to bring money back.
Okay. In this one, very interesting. Can an offshore trust inherit South African assets?
Can an offshore trust inherit South African assets? That's a good
We're really
question.
testing you in these Q&As, Lauren. I also have no idea.
I'm actually not sure about that. What I do know is that a lot of people ask us if trusts can move money in another country, and that is not allowed. So I would imagine that it's a no, because trusts are not given allowances. So I don't know how you would record that. From a SARB perspective, you wouldn't be able to report that or record it in terms of the flow and what is sitting within that trust. So I would say no, but I'm happy to check. I don't know who that is, but if maybe Jennifer, if you want to send it to me, and I can have a look at it.
Sure, we can always take that one offline. Yeah, double check. All right, I think we've probably got time for 2 more questions before we wrap up. Says here, I assume that donating to an offshore trust still triggers a donations tax liability in South Africa from the donor. So I think that's related to our question that now you can put more than your, 11 million rand a year into a trust. Are we still looking at a situation where there's donation tax for the person who's giving the money to the trust?
Yeah. Look, we don't get involved in the tax element of the transaction, so I don't want to speak on that. Purely on our side, it's from an exchange control perspective. But I think that really depends on the scenario. So who's included in the trust and who's sending the money to the trust.
All right. Then really practical question. Someone says that they understand that getting a tax clearance certificate from SARS is now taking a lot longer than it did before. Is that your experience? And, what is the kind of general turnaround time that you're seeing?
So
I presume that's for the 10 million to go out.
Yeah, so we're not seeing that, no. We do about 100 tax clearance applications a month. So I think the key there is that, look, the 21 working days, we haven't seen any applications go over that for quite a while. So it shouldn't take that long. I don't know what long is, so I think maybe we just need to look at that. But generally, if you get to 21 working days, you should escalate it. We haven't seen any going over that. And I think there's 2 shifts there. The first one is the fact that the ARB, for those of you who are familiar with the ARB on crypto, we never got involved in that, but we did see that impacted the tax clearance applications and SARS overall from a service perspective, because people were doing high volumes of applications to invest in this ARB and to make money through the crypto side. So that impacted the Reserve Bank significantly. The values are reasonably small most of the time, and so they have to reapply as soon as they've used that tax clearance. And so that became incredibly challenging. But now the margins on the ARB are so tiny, I think that's alleviated the SARS significantly. So we haven't had a problem with it at all. We don't do our applications through e-filing. We can do it if clients would like us to, but we do it digitally through a different method. And I don't know if that's maybe making a difference, but we haven't seen a delay in them. We haven't had an issue.
Okay, good. So 21 working days is kind of the SLA, and SARS seems to be sticking to that.
Yeah. Look, what I would say is that the way that it works is when you do an application, it gets allocated to the branch that the client is registered at. So your challenge is that if that SARS branch is struggling with capacity, that can hinder you. But I think also it's important to know that one of the changes that SARS have made is that there's only one point of contact on that e-filing profile. So if the tax practitioner is not the point of contact, or the client is not the point of contact, someone may have got the correspondence saying it's been declined or approved, and they're not aware of it. So I think they must just be careful around who that point of contact is and check it. That can help a lot.
Okay. Yeah, that's a really important piece of information. All right, I think let's close it off there. We're pretty much out of time. Thank you so much, Lauren. I mean, as I say, I've learned an incredible amount. I think just so practical, so interesting. And yeah, I really think that everybody online with us today would have also just really learned so much, and you just make it so easy to understand. So I think that just makes it even better. Thank you so much. We appreciate your time. Thank you everyone for joining us today. We really appreciate you being with us. Yeah, and I hope you really got a lot of value from the session.
Oh, thanks, Jen, and thanks so much for having me, Jennifer, and the NA team. Love working with you guys.